Hey guys, Tim Melvin here, and wanted to get back to you as early as I could and introduce you to what we're going to do, turning Real Income Report into Tim Melvin's flagship report. I mean, most importantly, this gives me the opportunity to use a really cool American Navy frigate as a logo. So, no, this is something that I thought about a long time. We originally kicked it around when we brought out Real Income Report. Um, I've long said that in the newsletter industry, working with a publisher gets to be very difficult. I mean, look at my own history. Every time I get in with a publisher, they are in charge of what we publish, when we publish it, how we structure it, what the fulfillment's like. It, you know, they want the more aggressive stuff that's easier to sell with options trades. The important question in the publishing industry is not will it make people money? It's can we sell it? They don't really care all that much, in my experience, about renewals because they're just going to do a new promo to a new list and bring in a whole bunch of new people to subscribe. If it works, hey, that's just bonus, but it's got to be easy to sell. Easy to sell means driven by politics, by tribalism, or gains that are impossible to achieve and maintain over a long period of time. So we're not, I didn't want to do that, right? I know from 35 years, well, 40, let's be honest, might as well, right? I mean, getting old, nothing to be ashamed of. 40 years of research, of really digging into the markets, of crunching numbers, of learning from some of the best minds in the history of the business, from some of the very best value investors, people who could trace their careers all the way back one generation to Ben Graham's original classroom. People that knew Ben Graham, that know Warren Buffett, to some of the best momentum investors, some of the best traders, some of the best fixed income folks. Just all the way around, I've made it a point to interact with and reach out to and talk with the very best investors of the periods of my career. And I've read everything. That's kind of my policy. If it agrees with me, I want to read it. If it doesn't agree with me, I really want to read it. I want to know what the other side says. One of the better pieces of advice I ever got was if it can be counted, it must be counted. Everything must be tested. It's not enough to have an idea. I have 10 ideas a day. That's 3,650 ideas a year. 3,657 of those are probably bad ideas or average ideas when we actually test them on data over an extended period of time. They sound cool, they look cool, could probably sell them like crazy, but they're not going to make anybody any money. They're not going to be worth what you pay for it. So our thought was we know there's four things that individual investors should focus on based on where they are in their life cycle, what their goals are. There's four things, and this will kind of fit everybody, whether you're in the hyper aggressive, make it now, make it now, make it now approach. You're in the, oh, hey, wait a minute, I woke up and I'm 50 and I'm behind. I need to catch up. Or you know what, I'm 60 and I don't want to go through another 50% decline. I want something that's going to provide me above average streams of income with a margin of safety. I can live with some fluctuation, but I need that income coming in constantly and everywhere in between. So something that fits everybody that's going to allow you to achieve your goals. Something that you can use no matter your personality. If you want to be, hyper aggressive all the time, you like a little bit of in and out, some action, this flagship report can cover that for you. If you like being hands on and digging on and doing special situations and stuff that nobody else is doing, that's fine. If you just want to sit back and collect cash and let it roll in, that's great. You want to only look at your portfolio once a month, make a few changes, move on with your life, go to a ball game, play with the kids, play with the grandkids, focus on your business, your professional practice, whatever's important to you, the flagship report will work for you. Now, here's the thing. We priced the real income report for a REIT letter, and we haven't ever changed the price. We've added the income portfolio. We've added a small cap momentum portfolio. We're going to be adding a small cap deep value portfolio, and we're not changing the price. Okay, we're building, we're adding on, we're not raising the price. I want to have this so you've got everything that you need, things that we know will work for individual investors um, over periods of time to build wealth based on where you are in the life cycle. So we've got equity real estate investment trusts. The guys since 1972, when Sam Zell and a couple other folks kind of talk Congress into remaking the tax and pass through structure of the real estate investment trust industry. REITs have handily outperformed the stock market. Um, that stock market is measured by the S&P 500. You've been better off in REITs. Most of the time, there's less volatility. You're collecting a lot of your return in cash. There's an excellent dividend growth component to real estate investment trusts. So when you pay attention to quality and to value, you gain an even deeper edge against the overall markets and against the larger REIT indexes. So you're outperforming by just 10% without doing anything, just static index to index. When you add value and quality and cash flow into the picture, we should be able to actually improve that a little bit, especially if we, as I always tell you to do, make volatility our very best friend and be a buyer when everybody else is selling. So equity REITs, I think they should be part of most investors' portfolios to some degree, and I would use them in place of the indexes. Fixed income was the second thing that we added. It's an alternative income strategy, and here we're investing like that. By the way, the top 1% doesn't have a secret option strategy. They don't have a secret trading strategy because they don't do any of that stuff. They made their money running a business or some other way. They're looking to pull income off of it. When you look at what the rich people are doing with their money, it's private credit, it's mortgages, particularly on commercial real estate buildings. It's arbitrage strategies. It's real estate lending. It's high grade, high yield. It's arbitrage strategies. I think we already said that one. That's what the alternative income portfolio. We're going to expand out a little bit. We're going to add some things like some arbitrage, like some higher grade, high grade, high yield that's not necessarily asset backed, and we're going to get more involved in private credit. Now we would be deep into private credit in the form of BDCs if we weren't just a half a tick concerned about what's going to happen if the economy does begin to weaken. But we're going to add some stuff in there to get the yield a little bit pumped up so it's a much better platform for alternative income investors. It's really good now. We're going to make it even better over the next couple of weeks. Again, making volatility our very best friend. We tend to buy on big down days. We've got them keyed up, ready to go. Today's not the day, but on the day, we will pull the trigger and continue to build out the alternative income strategy. And again, we're making everything better. We're adding more information. We're not adding a dime to the price. This is about building value. Now, the other one's small cap momentum. We've added that, and it's doing exactly what we said it was going to do. It's really high returns and it's really high in volatility. There's lots of turnover each and every month, but we, fundamental momentum, driving price momentum. We're pretty happy with this portfolio. We love the stocks in it. There's a few that have already become big winners and are heading off, with the potential to be even bigger. And each month, those that aren't working or have run up too far too fast, chop and gone. We are not married to anything in the small cap momentum portfolio. If it stops performing, we're out. If it keeps performing, well, we'll own it as long as that's true. We are adding a small cap deep value portfolio. Now, this is how I cut my teeth, ladies and gentlemen. This is what I started doing back in the 1980s, is Ben Graham style deep value investing. Now, and I'm going to write a free article about this later in the week, but I'll just share with you, Ben Graham, in the last interview that he gave, it's published in Financial Analyst Journal, he said, look, all that stuff that I used to do, going in and digging deep into the companies and doing, the deep dive. It worked well in the 1940s and 1950s because I was the only one doing it. Well, now that everybody's doing it, there's not really an edge, but never fear. What we've tested is that if you take simple strategies and you build them based on valuation and you buy 25 to 30 of these deeply undervalued companies based on different criteria, you can outperform the market. So we start from there. We add in a healthy dose of Marty Whitman style credit analysis, deeply undervalued companies with good credit or that have leverage and are paying back their debt outperform the market over time. And again, this is an area where you can really add a ton of value to the value by being really sensitive about volatility, right? This strategy does a little bit better than the market in normal times. When you're coming off a bad market, when the market's cracked, think 2020 and some other periods where we've had big market strides last April, you're talking massive returns to small cap deep value. So we're going to add this to the portfolio. Um, and again, wherever you are in your lifespan, right? You're looking for steady compounded returns. Then you want to be in small cap deep value and REITs, and you want to favor those small cap deep value stocks that pay dividends. You're looking for just income and growth of income, REITs, and the alternative income portfolio. That's your down the road strategy that's going to deliver what you need to meet your financial goals. Your income with upside, that's kind of a no-brainer, right? You want to be mostly in the alternative income, so you're going to be able to have an income element that is well in excess of inflation, probably well in excess of what you need to meet your investment needs, so you can set a little bit aside to grow the capital over time. And plus, we're valuation sensitive in the portfolio, so making volatility work for us, buying when things are undervalued or trading at a discount, gives us a little bit of an edge and some upside on top of the very high levels of income we plan to collect off of that portfolio. So we're also, this will fit where you are. It'll fit your personality, right? If you're really, really aggressive, then you're going to want to be mostly focused on the small cap momentum and the small cap deep value based on the current levels of market volatility. You'll want to be opportunistic with some of the alternative income and REIT situations, but the small cap stocks are going to be your main focus. And then you can just build it back being more conservative as your goals change. So again, everything that you need to meet your needs from way back here as a 25-year-old to way up here as a 65-year-old going, hey, wait, it's really important that I get my money back at the end of the day. So, and again, I could charge more. I've been told that I should charge more. I'm not going to charge more. We're going to give this a try. I know it's marketing 101. They actually, it's one of the first things that you learn, that setting that price really high creates an air of, of being exclusive, right? Of something that the poor folks can't buy. I'm not doing that, right? Yes, I want the guy with tons of cash. I want him in here. I want him as a subscriber. I want the school teacher that's been busting their butt for the last 30 years, tucking money aside. They built up a nest egg that's critically important to them, and they have their goals. I want them as a subscriber too. I want the small business owner that's trying to build his wealth and run and manage and fund this business at the same time. Basically, I want to be widespread. I want to be democratic, if you will, about this. I don't need to make all of my money off of any one reader. I'm looking for a pool of people who share similar thoughts, similar goals, who believe that, focusing on value, on credit quality, on strength and fundamental strength, and, paying attention to the fundamentals, ignoring the noise, that believe that that is the best way, the proven way to build wealth. If I can get a group of those together, I don't need to ever raise the price. That's kind of where we're going with this. So, and we're going to be driven on a macro basis by credit spreads. High yield credit spreads give us the big picture. When you've got spreads that are like they are today, they're really tight and they're just kind of going sideways. There's no signs they're going up. Then you want to be in high quality, high yield. You want to be in the higher quality REIT. You want to be in small cap momentum in a big way, and around the edges of small cap deep value. This is not the fantastic time to be a buyer, and as a result, there's really not a lot of small cap deep value. So you kind of buy the ones that you like, but high quality, high yield, mortgage, real commercial mortgage real estate REITs. Well, yes, big time. Residential mortgage REITs, yes, big time. That's kind of where you want to be in this environment where credit is good, price momentum is strong, the economy is basically pretty good. Nobody's afraid of anything yet. The economy's humming along, inflation's not too bad. And if you ignore all the noise coming out of Washington and Wall Street, things are actually pretty good. That's where we are right now, and that's kind of how we're advising folks to be positioned. Now, when they're low like they are today and they start rising, and we don't check them every day, we check them once a month. Right? Checking them every day, I mean, we'd be in, out, in, out, in, out. There's no, the market makers will love you, brokers will love you, won't make any money. So we'll check it once a month, and when you've got spreads moving up, then you want to tighten up the quality in your portfolio, right? You're going to want at that point, you're going to want to be looking at maybe owning some gold stocks that have good fundamental and price momentum. You're going to want to own the really higher quality, shorter term fixed income. You're going to want to limit yourself to the highest quality business development companies in the private credit space. So you're going to want to get a little bit more cautious, a little bit more careful, really high quality REITs. Now, when they're really high and they're spiking up and they have that first down month, that's small cap deep value time. That's where you're really going to hit a monster home run with small cap deep value. About the third or fourth month of it going down, small cap momentum is going to kick in a big way. It's a great time for high quality, high yield bonds, for mortgage REITs of all flavors because they're going to be at very depressed prices. And it's a fantastic time to be just piling into business development companies. We've seen this opportunity before. We'll see it again. And I think the next time it'll be even bigger because the Fed's not going to ride to the rescue the next time. Um, so again, focusing on the quality of the BDC, the quality of the assets and the valuation, and buying when credit spreads tell us that, hey, things are bad, but they're getting better. It's going to be, I hate using the phrase, but life-changing wealth. Even for more income oriented investors. So we're going to use credit spreads to kind of determine the flavor of the mix, how aggressive or how conservative we're being. We're going to put all this in a wrapper. We're going to call it Tim Melvin's flagship report. I am not changing the price. Okay. So we started with this. Now we're about, well, we're going to call it 5 times bigger because we're adding a lot more macro on top of it. Each week, you're going to get a short video with kind of a 30,000-foot macro view derived primarily from credit spreads, from National Financial Condition Index, from data, not from stories, not from rumors, not from arguments, from none of that. From, this is what the data is actually telling us about the economy. And the VIX kind of comes into play there a little bit too. So we'll do a little video on that. We'll tell a couple stories maybe if we've got something good going on, and then you'll have the written report broken down. I mean, there's no point in talking to you guys about REITs every month. That's ridiculous. Every week. That's ridiculous. Once a month is plenty. So we'll do REITs one week, we'll do fixed income one week, we'll do small cap momentum one week, and we'll do small cap deep value one week. And it's part of the macro. If there's anything that needs to be shifted around between those asset classes based on kind of life cycle and what we're seeing in the real world, then I'll tell you. It's up to you whether you do it or not, but I'll tell you my thoughts on that. So that's the Tim Melvin flagship report. It's different from what anybody else is doing. It should work a lot better than what I think anybody else is doing. We'll have more to say, particularly about the interplay and kind of the magic that happens when you mix 50% small cap momentum and 50% small cap deep value into a single portfolio. It gets pretty exciting is basically the takeaway there. For income investors, we're going to I'm excited about the income portion of this. I really am. So we're going to really deploy the alternative income strategies, which together with the REITs and the dividend growth element of that can really help you get where you're going without having the broader risk of owning stocks. So we think differently than everybody else. It's worked for over, well, not over 40, but over 35 years. Um, it doesn't go up every day. It doesn't go up every week. It will not make you rich by next Tuesday. And that's okay. If you think the same, you've got friends that think the same, tell them about it. Again, this is going to be reasonably priced. I am not supporting an entire administrative staff, 20 writers, all of whom went to liberal left wing colleges to get, and I'm not joking about this, by the way. Most of the writers I've run across are ridiculously liberal. They sit around and laugh about how they sell to the conservatives. I don't really care what your politics are, but we're not supporting all of those people. We don't have rents on downtown inner city office buildings that we have to pay. I don't have any of that overhead, right? I don't have marketing people to think up stupid, dumb promises to make that I have no intention of keeping. We use Beehive. We may not. Well, we're thinking about switching to Substack, but anyway, we're using platforms that take care of all the payment processing and all that for us. So I don't have the overhead. I don't have to charge you an arm and a leg. I could probably charge more, pay a couple marketing consultants to come in. I know some good ones. Hire a copyright. I don't want to do that, right? I want to make you money. If I make you money, you'll continue to renew, and I will continue to build a fantastic business. I think that's the way the business ought to operate. I'm going to see if I'm right or not because we're going to push this out. So it's going to be REITs, just like we started with. We're going to expand out the alternative income section. We're going to keep going with the small cap momentum, and we will add small cap deep value to the portfolio. The only thing we're keeping as a set aside, and yeah, I'm sure y'all heard it, we're going to keep the banks off to a side. That's a little pet project. So if you wanted that, that'll be the only upgrade I ever offer you is a chance to upgrade to the bank portfolio. And that's entirely up to you whether you do or you don't. Banks are a niche, they're not for everybody. So, anyway, Tim Melvin's flagship report. I like the name. I love the logo. I am a bit of a history buff, the Revolutionary War, and having grown up in Maryland and Annapolis and around that area, I'm a bit of a Navy buff. So, and a Navy football fan starts next Saturday. Go Navy! Um, so that's the changes that are coming. I hope you like the idea. I hope you stick around, stick with us. There's a lot of money to be made over all the volatility that's going to come our way over the next decade. I think that the broader markets are not going to do well over the next decade. That's what the macro stuff is telling us. We have an opportunity to be in those asset classes that have historically just blown away the broad market when things get a little rocky. So, thanks for being a part of the adventure so far. I hope you stay with us. I will do everything in my power to make sure this is powerful, interesting, educational, and occasionally entertaining. Guys, I'm Tim Melvin. Thank you again. We'll talk again soon. If you've got any questions, shoot us an email. I'll get back to you usually within 24 hours. Thanks, everybody.